Hi, I'm Ben Carrington from Compound Property Buyers Agency, where we help everyday Australians build wealth through property. And today, I'm joined by our Head of Research and Strategy from Compound Property, Adam Young. And today, we're going to be doing something a bit different. We're going to be diving into a market that not many people are talking about it, but we see big opportunity for 2026. Adam, welcome to the channel.
Thank you, Ben. Thank you for having me.
Good to see you like I do every day.
Yeah, almost a bit sick of each other by now. But
Absolutely.
Right.
So today, as we know, in the market across the country we buy, it's getting pretty hard to buy, which I can't believe I'm even saying, but under 600, even under 700,000 is getting quite challenging for houses, right? But today we're going to be talking about a market that you have found has very strong fundamentals, because you can buy in remote places, obviously, at that price point.
Yeah.
But we're looking about an area that has strong fundamentals. We've got affordable price points, still possible between like 500, 600, even, thereabouts.
Yep.
Strong yields, and everything from a data perspective is looking pretty good. Is that right?
It is, and we'll delve into it a little bit deeper later.
Yep.
But yes, all the fundamentals are looking good.
All right. Now, I know you've been spending all night researching this market, so we're very excited to hear about it. What is the market, Adam, that we think has got good potential for 2026?
Yeah. So today I'm going to talk a little bit about Tasmania.
Right. Tassie.
Yep. Yeah. So Tassie, look, it does fly under the radar a little bit, but timed correctly, it can offer exceptional results. So I suppose looking back long term, over a 20-year period, the city of Hobart actually outperformed every other capital city in the country. And that's over a 20-year period. The important thing to note is a lot of the fundamentals that led that to happen still remain. So we're going to get into why I like Tasmania. And it's, you do have to be careful. It's not the whole of Tasmania. There's specific parts that we're looking at. But yes, Tasmania. Very interesting. I remember I did a video quite a while ago. I was shocked even myself. So over the last 20 years, the highest performing city so not just capital city, which was Hobart, at any region was actually a place called Burnie, which is in Tasmania as well. And I think between 2004 and 2024, it had done 8% per year. Put in perspective, I think Sydney had done between like around 6%. So, way outperformed anything. So amazing to see. Over a 20-year period, those numbers are crazy. Those numbers are crazy
definitely.
Because it's not uncommon to see that in a short period of time. But over a 20-year period, those numbers are huge.
Especially for a place that no one's really heard of.
No,
no offense, obviously, if you're from there, but not many have, in fairness.
Yeah.
So today we're going to do two things. We're going to look at why Tasmania from a macro perspective, like what's actually going on there, because it's super important. Then we're going to break down, I think you said, is it 3 suburbs to buy and maybe 2 to avoid?
Yeah. And that'll just help to give a bit of context as to, why the whole of Tassie might not be right for buying. But yes, we'll jump into a few that are looking really good, at least for the first half of 2026. And obviously things change as time goes on. And we'll look at a couple that personally I would probably avoid.
Beautiful. Well, first thing, why Tassie, mate? What's happening there?
Yeah, so I suppose with every market, we do look at sort of the macro fundamentals. Is the housing market affordable? Is the vacancy rate tight? Is the population growing? All those types of things, and they're all important. But I'm going to jump into some of the higher level stuff and look at sort of what sort of projects and infrastructure is happening in Tasmania. Different parts. So that's we'll kick off with that. And then we might jump into some of the data. And again, like we've said, we'll jump into some suburb-specific data and look at it from a micro level as well.
Definitely. All right. So from a macro infrastructure, I'd love to hear kind of what you're seeing and what's coming up.
Yeah. So probably one of the more exciting topics and one of the more exciting projects, probably nationwide, not just in Tasmania, but obviously the announcement of the new AFL team, the Tassie Devils coming in.
It's actually massive, isn't it?
It's enormous, and what that does to the economy, we'll get into it, but. Obviously, with the new AFL team, they're building a brand new $1.13 billion stadium. So I've just got some things written down here just to give you some context about the importance of that. Just quickly,
I know you're from Sydney. You're AFL, because I'm from Melbourne. So to me, that's just huge news. Sydney boy, like what's your thoughts on that?
AFL, I had a lot of close mates grow up playing and watching AFL. I had to pick a team. Be the Bloods, obviously, the Sydney Swans. But no, I'm more of a union rugby league fan, to be honest. So if anyone's interested, Big Bunny supporter, South Sydney Rabbitohs.
Right. To me, unions what bloody forms a workforce when they go against the. I don't know anything about it.
They call it the gentleman's game, so that's why you probably haven't heard of it.
Right. Yeah. Done.
But no, so AFL Stadium, brand new facility. Yep. So what this is going to do to Hobart and I guess the broader Tasmanian economy.
Yeah.
It's going to create between 1,500 and 4,000 construction jobs.
Yeah.
So that's enormous.
Huge.
It's going to create about 6,500 jobs around the precincts once it's completed.
Permanent, is it?
Permanent. Yeah. There'll be about 1,000 operational jobs per year.
Yeah.
So obviously you think about, there's different events and different things going on.
Yeah.
It's just a natural sort of, you need people in those operational jobs.
Mm-hmm.
And then what that does from a dollar perspective, $300 million boost to the economy. So all of these things, it increases the livability of the city. It increases the economic, stability.
Definitely.
And naturally when that happens, property prices increase in line with it.
Definitely. And it puts it on the map too, because suddenly people are going down to Hobart to watch the footy. They're watching the footy on TV, seeing Hobart, seeing Tasmania. So it's just a general overall a net positive.
Definitely. So that's probably a good segue, not into my second point, but one of my points, and that's around tourism.
Yep.
So obviously, if you've got AFL, people, there's an influx in tourism, people coming down to visit.
Mm-hmm.
But an interesting, another one that I wanted to talk about was the port upgrades happening in Devonport.
Yeah.
So obviously, big dollar spend happening there. What it's going to do, it's going to give it an extra 40% of capacity for the freight industry. So naturally, that boosts the economy. But also,
I wonder if it's called Devonport because it's got ports. I've never even thought of that.
Is it? Yeah.
I've never even thought of that. I reckon, that's what it's for.
Devonport.
So it's going to get even better.
Definitely. Yeah. And just going back to that tourism side, they're actually looking at bringing some of those cruise ships. So there'll be a cruise terminal. And again, there's going to be, they're projecting up to $100 million boost in the economy from tourism in that sense. So that's another key point that I wanted to touch on.
Yeah, because you got the Spirit of Tassie, which I've actually done and nearly was sick the whole time. It was so rough. But that goes from Melbourne to Hobart, I'm guessing. But is that maybe you can go to Devonport now, do you think? Or
that's the plan.
Yeah.
That's the plan. So obviously all of this is a work in progress, but on paper it's looking very promising. Yep.
The port in Devon, I guess.
Yeah, the port in Devon.
All right, what's next?
Next, we've got the Hobart City deal. So this is a huge one. It encompasses a bunch of things. Just to touch on a few of them, there's a big bridge upgrade. So that's going to sort of enhance the transport network from areas of Hobart. Obviously, Hobart's situated on the water. And
such a funny.
It's not like your Sydney or Melbourne's where it's all just sort of in one precinct. And when you think about Sydney, yes, the north is separated from the east and the south. It's one short bridge. Hobart's very different. So that's happening. There's $100 million upgrade happening at the airport. So with Hobart, it's you can only fly interstate at the moment, but what this will do is allow international flights to come in and out of Hobart. So that's enormous.
Oh, it's big.
And again, that's going to create more jobs. And if there's a projected number on that, it's about $128 million boost to the economy in Tasmania.
That's pretty crazy. So you can fly. So at the moment, are they going international back to Melbourne? Are they mostly? Or
there's connecting flights. So I have to connect to Melbourne, Sydney, even Brisbane.
Nice.
Yes. So the Hobart City deal is one to look out for.
Yep. What else are you seeing in Tassie?
We're moving locations slightly now. So we're going from Hobart to Launceston. So Launceston, there's a lot of health and tech investment happening. So just looking at some of the numbers I've got written down here, there's a $650 million hospital expansion project underway in Launceston.
So just on that, obviously my ears prick then, because one of the biggest things is a hospital upgrade, either a new hospital or an upgrade, is one of, if not the biggest change an area can have. We saw it in Bundaberg, $1 billion hospital has basically transformed the whole area. We're seeing it in Melton at the moment, the upcoming hospital there. And obviously you're hearing it's going to be, there's one in Launceston, is there?
Yeah, so you're exactly right. So it is one that we look out for. It's a bit of a hack, if you will, around sort of projected property growth.
There's the Bunnings effect. So you look for a Bunnings. It's always a good sign because they do more research than anyone. But a good little hack is finding a good hospital or big hospital upgrade, infrastructure upgrade is always a big, a lot. It's like a bet on the future, isn't it? It's like an investment from the government into the area for the future.
Well, and when you think about it, the health industry is one of the most stable industries in the whole of the economy. We need it. It's essential. So all it does, it creates jobs. It creates the desirability for people to want to live there because they know they've got the health services near them.
Definitely.
So yeah, it's massive hospital upgrades.
And from a greedy landlord perspective, really good high earning tenants as well. We've seen that in Bundaberg. A lot of doctors have moved into the area. It's driven rents up.
Yeah.
Really good tenants naturally as well. So there's a lot of positives from a hospital.
Yeah, massively.
Yep.
So yeah, on top of that, Launceston's got $2 billion development earmarked for AI and energy development. Yep. So obviously we're hearing a lot about AI. We're hearing a lot about green energy. So Launceston's an area to look out for that type of investment. And looking, as we said, we're looking at a macro level right now, but there's plenty going on all around Tassie. So Launceston, Hobart, and even some regional areas that we'll touch on.
Definitely. I'm actually quite familiar with that because I was an early investor in Firmus, which is going to be the $2 billion data center. They're under construction now. I think it's ready this year. So they put $2 billion, going to be Australia's first, largest AI data center.
Yeah.
Obviously, they've got all the issues around energy and how they're going to actually run the thing and water and everything, but huge investment into Launceston.
Massive. So with all of that going on, I mean, the other thing is we are starting to see some early investor signals. So investor loans have actually gone up by about 10% in the last 12 months. So that is a good sign to say, well, it's not just what we're seeing, other people are seeing it too. And it is a market that's shaping up to be, potentially a very good spot to put your money into in 2026.
Well, obviously these investors are saying something, and you are the data guy. So I'd love to hear, we've had a look at the macro. I'm actually surprised. I knew there was a bit going on there, but actually it's probably even more than I thought. Not only that, it's actually a beautiful place. I actually went down to Hobart, and you know that last year. It's beautiful. Loved it. Tassie is such a good place. Everyone's so friendly. It's really good lifestyle down there. So there's a lot of actual positives around that as well.
Definitely. Yep.
So being the data guy, I know you've got a bit for us today. So what are we looking at here?
Yeah, so what I wanted to do was maybe go through 3 suburbs that, looking at some of the more sort of supply and demand metrics, some of the data that we lean on heavily when sort of selecting an area.
Yeah.
So 3 that I would buy in and 2 that I'd maybe avoid.
All right. Well, let's hear what do you got. So what are you going to go through? First, the good 3 suburbs, or then the 2? So
let's start with the good 3. So
what's the first one?
First off the rank, we've got a suburb called Midway Point. So this is about 21 kilometres northeast of Hobart, which is about 30-minute drive, and this is this is an area that's going to benefit from all of those upgrades with the City of Hobart deal. Yeah. All obviously, improvements to the transport. There's improvements to connectivity to Hobart CBD. Yeah. So this is a good one to talk about. So jumping into some of the numbers, look, you're looking at a median price point of about $650 in this suburb. Yeah. So still relatively affordable. Yeah. If you're looking in the right areas, you can get well below that. Definitely. Vacancy rate, look, very, very tight, 0.74%. It's got a high owner occupancy with 76%, which is something that we look for. We don't want to be buying into a market where it's, there's a lot of renters, because it just means that it's an investor-led market. Yeah, definitely. And I remember I did a video on this particular suburb, and I remember the reason owner occupiers want to live there is because it's beautiful. It's right at the end of at the end of that bridge, looking over the water, literally right Midway Point. It's right on the point. So it's a beautiful place. It's a really nice place. So it's got, it's got that lifestyle appeal, and it's well connected to the CBD. So it's got the best of both worlds. Now, one big metric, and I know you've spoken about this before on some of your other videos, but we've looked closely at affordability, and there's a strong correlation between whether an area is affordable and how high its ceiling for growth potential is. Definitely. So what we want to be seeing is somewhere below 35 years. And if you want to have a better understanding of how that metric works, maybe we can link your other video in. Yeah, if you're not sick of me already, you can definitely tune in and watch that, because I talk about it. I feel like I just sound like a broken record, but it's so important. So important. So looking at Midway Point, it's got an affordability index of 34 years, so that's nice and healthy, below the 35 threshold. Yeah. And just to put in perspective, a bad suburb we've seen 70 years. Well, that's probably a suburb that's very much at the peak of its growth. So it's almost tripled in value over the last 5 years. So we can see them as high as that. Yeah. So it's double as expensive as this property, or half as affordable as this area. And that's what we like to look at. Yeah. Yeah, exactly right. Some of the other metrics we're looking at, so days on market, nice and low at 28. So properties aren't taking too long to sell, which we like to see. Stock on market, 0.31%. Again, very tightly held suburb.
Yeah.
And importantly, the rental yields are relatively healthy. So just over 4.3%, which is very reasonable in today's market. I think gone are the days of being able to buy a property with a 6-7%
for
yield
a house,
straight off the bat for a freestanding house.
Yeah. And we've been buying some. I've seen yields over 5% too. So this is the average, but we've been getting higher than that.
Yeah, definitely. And the last couple of things that I've kind of pulled out is looking at a 10-year suburb growth rate. It's grown by, on average, 11.8%. So it does have really strong fundamentals from a longer-term perspective.
That's good.
But in the shorter term, it hasn't performed at all. And that's exactly what we want to see. We don't want to be buying in an area which is coming off the back of a big growth cycle. So over the last 3 years, on average, it's grown by 1.5%. Which, when you think about the national average being 6-7%, it's well below that. So all of the fundamentals on this suburb are stacking up for us.
Awesome, that's good. So Midway Point, one to watch.
Yes, definitely.
And so that's a suburb in Hobart. So where are we going to next? It looks like you've got a different city this time.
So as the name suggests, we're looking at South Launceston.
Okay. Yep.
So median suburb price of $562,000. So this is really nice and affordable.
This is good. Yeah, definitely.
And when we're talking about this, you're getting a generous block size.
Yeah.
So you can buy in other areas of the country, but you might be limited on the size of the block.
But these are proper family homes when we're looking at
family
that.
homes. Yeah. They're good, solid homes. So going through some of the same data points that I just went through, vacancy rate really tight, 0.17. So won't have too much trouble getting it rented out.
Yeah.
Owner occupancy a little bit lower, but 56%, so it's still within reason.
Yeah. I'm guessing that might be because it's quite central.
It is. There's a lot of industries going on. Like there's a lot of jobs, and so and temporary jobs as well.
Yeah.
So hence the owner occupancy, but not too bad of a thing when you think about it because there's a lot of demand for rentals. So,
definitely, and you can't look at one thing in isolation. It's kind of, you've got to form a picture, and there's no perfect suburb. I wish there was, right? Because we'd be buying there, but there's not everything's perfect.
Yeah, exactly. Now, affordability, this one's really affordable. So it's coming in at 28.12 years to own.
Which is pretty, put it this way, probably only ever seen from a house market, low 20s would be almost the bottom you can get, don't you think? It's very rare.
I haven't seen low 20s in a number of months.
And it doesn't last long when it's low 20s. So 28 is good. Yeah. Very solid.
Exactly. Now, days on market, 22. So think about it. A property's lasting 3 weeks before it gets snapped up. That is very, very quick. Yeah. Rental yields nice and healthy, well above 5%. So for all of those investors looking for a healthy rental yield on a house, this may be your market to be watching.
Yeah.
And lastly, let's look at the sort of long-term and short-term growth over a 10-year period. It's averaged 10.3%. Yeah. Again, well above national average. Yeah. And then over a 3-year period, it's averaged 1.4%. So
why would I want to buy there though, if it's doing so badly?
Hey, look at all the other fundamentals we've spoken through. That's where people
I
go
say
wrong.
that jokingly because that is a question that we get all the time. Right? We send them a property, we say, look, it's a really good long-term performer, but it's done really badly in the last few years. This is a great buy, and they think, what are you talking about? How's it a great buy, right? But the best buys that we've ever done. And I'm talking about the early days of Perth and Townsville and all these different markets, the 3 and 5 year growth rate was sometimes in the negative. Yeah. Right. And that's what we look for because we know long term they're gonna grow. Yeah. Right. So I'm really liking this when you're looking at Midway Point and South Launceston, is that they're great long term performers, but they've done pretty poorly in the last few years when everything else has done so well, right? Yeah. And that's kind of it seems like its time in the sun is coming.
Yeah, exactly. And something else that we do, and clients might not know that we do this, but we look at what it's done over a 10, 20, 30-year period, and typically markets have a bit of a pattern to them. Yeah. And so
don't give it all away.
But it doesn't. What I'm trying to say is it doesn't concern us seeing that. It actually excites us.
Exactly right. Awesome. All right, so we've got 2 crackers there. What have we got for number 3?
Yes. So you mentioned it earlier, but it's more of a regional location in Tasmania. Yep. Burnie. Yep. So obviously
top performer.
Obviously one of the top performers. So not Burnie itself, but a suburb about 15 minutes west of Burnie called Wynyard.
Okay. Yep. Not the station in Sydney.
No, we're not. No. We're talking another state, Ben. So Wynyard, Tasmania. So median price point in this suburb, $432,000. So
Very.
How many houses can you buy at that price point these days?
Not many.
Not too many. Again, vacancy rate is really tight, 0.66%.
Yep.
Owner occupancy, nice and healthy, 72%. So we like to see that. Again, very affordable. So 27.4 years to own your property.
Solid.
Which is great. Days on market, 45. So a little bit higher, but they're trending down. So that's important to know. We're sort of seeing a pattern begin.
It's actually good to see because I know some of these Launceston and Hobart markets, the reality is they are already, they're getting competitive now. They're just starting to, but we're seeing that in the days on market. So Wynyard in Burnie might be a little bit of a softer market, a bit easier to get into by the sounds of it.
Yeah, potentially. And exactly, if you look at some of these numbers, if the numbers are slightly higher than you would like to see, well, delve in a little bit deeper. That's what we do.
Yeah.
And we can see them trending down.
The trend is key. Yeah.
Now, stock on market, 0.32%. No arguments there. Very tight. And again, 10-year suburb growth rate on average 11% over the last 10 years, but over the last 3 years, 2%. So again, has the fundamentals there as in a market that's about to pick up.
Yeah, very good. And it's something that we see, isn't it? Because, you know, when you look at like a state, right, you see a lot of the similar trends. So all these three suburbs, they're completely different areas of Tasmania. You've got Hobart, Launceston and Burnie, but their performance is very similar. They've had great long-term 10-year performance, pretty poor 3-year performance, and now all their supply and demand metrics are looking really solid. So they all do kind of line up together.
Definitely. And when you pair that with some of the big projects that we spoke about earlier on, it's just the fundamentals are
That's
there.
what's driving it.
It's a market that I would want to be buying into.
Definitely. But like you said, you can't just go blindly, can you? So not every suburb's getting the benefits. So tell us, I know you picked out 2. Tell us which 2 should investors be avoiding?
Yeah, so this is where it becomes really interesting. So I've got a suburb in Hobart, not too far from Midway Point actually. So this is where you have to be very careful. You can't just go anywhere and think I'll just buy somewhere in Hobart and it's going to perform well. So we've got a suburb called Gagebrook. So obviously it's over the bridge again to the northeast. We've got a median price of 426,000. So, looking at that, it looks really enticing to be buying there. Rental yields of 5%. Again,
good.
Looks great.
Yeah.
Stock on market very low, 0.2%. Vacancy rates really tight, 0.66%. So what I see, and this is where I'm thinking, okay, this is looking good. Like maybe I'll be buying here. Very affordable. It looks like it's an affordable price point. It's cheap.
Yep.
But I'm coming down to the affordability index, and I won't go too deeply into it. But the affordability index is relative to the average income earner of that suburb.
Yeah.
And so we've got 44.6 years, and that's quite high for this price point.
Definitely.
So
that's surprising, isn't it? It must be like
really surprising.
You know, it means basically it's quite a low income earning area.
So some of the red flags, and I've gone like I saw that and thought, why is this? By the way, 26% owner occupancy rate. So that's 26%. That's really low. 26%. So
it's one of the lowest I've seen.
One of the lowest. And so when I've looked a little bit further into it, yes, Gagebrook has a slightly lower socioeconomic demographic. And it's got quite a high rate of public housing.
It must.
It does.
Yeah.
And you know, in turn, you know, high crime rates and things like that. So look, when we looked at it at the beginning, it started to stack up and present as a really strong area. But then going that little bit further, it's like, well, there's a couple of real red flags there. Yeah. So Gagebrook is one that I probably would be avoiding. Cheap
for a reason, they say, and that's what you gotta be careful of. Just because it's cheap, you know, doesn't mean it's good value. Yeah. That's a really important term. Oh, well, that's a good find. That's a good pickup. What have we got for the second bad one?
Yeah, so again, we're going to go north, and we're going to head 45 kilometres north of Launceston. So part of the Launceston catchment, but technically regional. So it's a suburb called Beauty Point. And again, as the name suggests, it is a lovely suburb. I mean, you know, picturesque, and it looks like it's got a lot going for it. So we'll unpack the data here. So median suburb price point of 533,000. Again, that's pretty reasonable. Rental yields are very strong again, 5% plus. Low stock on market, low vacancy rate, and a good owner occupancy percentage. So 82% owner occupiers.
Which is big.
So far, looks like a great buy.
Definitely.
Now, some of the things that are concerning, again, we're going back to the affordability index. So, you know, comparing to the average income earner in the area.
Yeah.
We're looking at 48 years to own,
Jesus,
which is
that's a big difference.
It's a little bit high. And the reason we're touching on this so much is because when you think about it, owner occupiers are generally the people who drive prices up because they're so desperate to get the house to live in. They'll offer above market, and they just keep bidding with each other, and in turn prices get driven up.
Definitely.
If they can't afford it, they won't do that. So there's
a limit.
There's a limit to the growth that this area can have.
Yeah.
And the other thing is, looking at the data, this area has actually seen about 50% growth in the last couple of years. So it's actually had a big jump.
Yeah.
And whilst it seems relatively cheap on paper, 533,000, a lot of the growth has actually been relatively recent.
That's a really good example because that's exactly what we look for. Remember, we look for low growth and high affordability. Where you can see here, this one has had a lot of growth, and as a result, it's now lower affordability. So it would have been a beauty to enter in 3 years ago because you've had a great run, and it still will keep going, right?
Yeah.
But how much is left in the tank? That's the question, and probably nowhere near as much as the South Launceston, for example. It's 27 years.
Exactly right. So look, don't get me wrong, you'll probably be getting a nice asset and a good solid house if you're buying in this area. But looking at the performance, if you were to go to somewhere like South Launceston or Midway Point, you're probably going to be far better off in the next 2-3 years.
Definitely.
Going with them.
Yeah, definitely. Well, that was great, Adam. Appreciate that, mate. So overall, Tasmania, really interesting area to look into. We've got some big projects there. We've got a lot of kind of positive kind of momentum building. We've got an uptick in investor loans, so we know that there's a bit of interest. It's not a cool market, but it's definitely getting warmer, but it's not as hot as some of the other markets around the country. There's a good mix too by the looks at you got good markets in Hobart, Launceston, Burnie, Devonport. There's quite a few good areas to buy in. But also there's some to avoid as well.
Absolutely. Yeah. So look, I love doing this stuff because it shocks you what you see day in, day out. Like I said at the beginning, you might hear the word Tasmania and think, great, I'm going to buy something there, but you do need to be careful. You need to be making the right decisions and entering very specific markets within the market, as we say.
Great. Well, mate, it's been great to have you on. Thanks very much for your research, and we're looking forward to helping some clients get into Tassie in 2026.
Yeah, likewise. Thanks, Ben.